Hello everyone, it's Chris here, and I'll be your friend, your host, and your tutor. So today we are going to be looking at nothing specific, but then I want to actually discuss why you might have missed what happened on Euro USD the last 2 weeks, which was this whole sell, right? This entire sell that actually just played out. So we're going to actually be breaking it down, and there are a few things you're going to be able to pick from this breakdown, right? A few things you're going to be able to pick from this breakdown. So let's get right into it. Yeah. So you're welcome. And today our pair of choice is Euro USD. I made a lot of money with this particular sell last week, right? Throughout last week, and the logic was actually very, 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 very simple. Now, this is actually what I do before I even determine my bias for the week. Before I get into a new trading week, I want to actually recognize the trading range for the week. So by trading range, I mean, do we have a break or structure? If we have a break or structure and I'm expecting a retracement into an unfilled point of interest, right? And we have that the candle here taps into like a high time frame point of interest, which is in this case now a supply, right? I expect that price would actually sell for a few weeks, or even maybe just 1 week, or even a few days, depending on how volatile it is, right? Price is going to sell for a few days and come into a point of interest that I am also expecting before we start moving back up. Now, these are things I want to see. There's an opportunity to trade the sells, and there's an opportunity to what? Trade the buys, right? Opportunity to trade the sells and opportunity to trade the buys. So our job is just to recognize two things. Is to recognize what? Number one, the trend change that happens here, right? The trend change that happens here, number one, validates the break or structure and the what bias of the market or the current trend of the market on a high time frame perspective, right? So by that I mean, if we have a break or structure and price has not returned back to fuel and unfilled points of interest, maybe depending on the entry model you trade, right? This is bullish because okay, every break or structure creates a new high, right? Every break or structure creates a new high. So that is that. Now, after determining the trend change here, that determination of trend change is what actually gives me the confidence to actually find sells into the week, right? And then the next thing is to identify, or before you even identify all of this, before you start counter trading, because when you're trading against the trend, you're counter trading, right? So before we counter trade, we have to also determine where we're expecting price to actually drop to, or the point of interest we're expecting price to come into. It's going to be like more of like a pressure point, right? I call it pressure points, or we call it like support and resistance levels. So all demand zones, whatever you want to call it, right? Demand zone is a place where we would expect price to take on new higher prices. So I would also determine my demand zone so that I don't keep selling even when I'm on my demand zone, right? I determine my demand zone so that I can know where to stop my sales, and then I think that's it. So when we've determined the demand zone, validated the break or structure, we would now have to wait, right? We would now have to wait until price gives us what? A change in state of delivery on the upside here before we can start selling into the week, right? So that's literally what happened on Euro USD, and it happens on every single every single trend that the market actually prints. So I'm going to start with the weekly time frame. All right, we're going to start with the weekly time frame. I think I'm going to let me cut price. So the weekly, I don't want it to be too fast. I want to like simulate it, like so you can see it in real time, right? So I'm going to literally like chop off this particular price action. I think I still do have my replay. This video is going to be very, very choppy, and I'm also going to try to zoom in as much as possible. I don't want to use the automatic zoom, but in cases where I'm able to use it, you're going to be able to see a lot further. But in cases where I'm not able to, because I think I have a software that automatically zooms in cases where I'm not able to do that, you can actually help yourself by just pinching into your screen and zooming in a bit, right? So yeah. Anyways, I'm going to cut the screen, and yeah. So let's replay price from here. Let's cut this place out. Okay. So now I've cut this place out, and we can actually see that we have a structure, a bullish structure on the higher time frame, right? We have a bullish structure on the higher time frame. We broke structure above here, confirming bullishness. You can see price has returned back to this hidden block. Price has returned back into this hidden block. There is another block here if you go down to the 1 hour time frame, but I've just seen it from the weekly time frame. It's a hidden block, right? Now this price has broken above here, so this place is mitigated, right? This place is also mitigated. One of the strongest other blocks I talked about, see it here, mitigated, and that was what price is moving from. And we can see there's a new break of structure here, and within that break of structure we have like a demand. We have a demand, right? So we expect price to come into this demand to continue a new push to the upside, right? So now that that is determined, we need to also verify it on other time frames as well. So I'm going to literally go back, right? So we need to verify it on other time frames. So let's check our daily time frame to see if the daily time frame agrees with the weekly time frame, right? We need to see if the daily time frame agrees with the weekly time frame. So the same thing. So you can see that the other block is now very clearly visible here, right? And this looks like a pattern. This pattern, head, shoulder, head, shoulder, break, a break of structure. This is the break of structure, closed above with the body, right? And price came into this demand zone, right? And then started going up. Now we have another break of structure, and there's a demand zone here, an unmitigated point of interest there, right? An unmitigated point of interest there. And I think you're currently going to see that price is actually reacting from there. In today's market, price is reacting from there. So the weekly agrees with, the daily agrees with the weekly, right? The daily agrees with the weekly. So I'm going to quickly mark out everything that's happened there is not my business. So I'm going to quickly mark out this break of structure, right? Yeah, I'm going to quickly mark out that break of structure. So now we're going to actually look for points of interest or supply zones that might actually push price back down into the demand level, right? Because now we actually want to take buys, and the market cannot just keep going up forever. The market cannot keep going up forever. Price will definitely come down back to take orders from the demand zone and continue the push to the upside. So we expect price to come back into this demand zone to take orders and then keep going up. So now we need to look for points of interest on a much higher perspective or on a much higher level that can push price down for us, right? And that is what this order block is doing here. Now, if you know your order block very well, you know it consists of three things. We have the source candle, which is that pink one. Then we have the break of structure. Can you see it broke? It broke structure around here. So that is the full order block. That is the full order block on the weekly, right? That is the full order block on the weekly. So I'm going to mark that out and wait for price to come into that particular zone. Now, when price comes into that particular zone, we will then actually see how price behaves when price comes into that zone. We will see how price behaves when price comes into that zone. So let me go to the 1 hour time frame, and so we can then play price when we are there. So, but before I actually start playing price, I'm going to tell you the 3 trend change. I plan to do it in a new video that's for the beginners playlist. If you're actually following through, I kind of like stopped the beginners playlist for a while, but I'm going to resume back. I think that's the second thing we're supposed to learn, market structure, right? Sorry, let me turn off my session indicator. I think it's what's making the whole thing look. Your session indicator just helps you see the different sessions of the market, nothing more. Doesn't help you trade. So now there are different patterns the market actually makes when we're about to have a trend change. Different patterns the market makes when we're about to have a trend change, right? So the first thing is like exhaustion of momentum. So if to say we have price after a break of structure leap high as high as like 40 pips, let's say they move from here to when it broke is like 40 pips, right? You'll notice that during an exhaustion, we're not going to see price climb up as high as that anymore. Like price is going to be like, so now what's going to happen is like the momentum at which price uses to take off above the high now reduces to a point where it's now so small, and then price just falls down, takes out this low. And when price takes out this low, those who trade aggressively can be able to take their orders from any point of interest here. But I don't trade aggressively. I like to make sure that that the POI is confirmed, or that the trade idea is confirmed before I'm able to take trades, right? So I would have to wait for a break or structure. And now a break or structure does something. A break or structure continues price in the same direction. If you've been following, a break or structure continues price in the same direction. So for a break or structure to happen down, it just simply means that this particular trend change has been confirmed. So we have our shifts, or a change in state of delivery, which is change of character, money transfer, call it whatever. We don't have the break or structure. Then we can have price sell from either here or here, depending on where is unmitigated. So mitigation is also a very important knowledge. So depending on which of them is unmitigated, would fall from there. So there's also another trend change pattern called the shift, right? Where we have price fail to swing. So you know that in an uptrend we have break or structures, but let's say price now fails to create a new high, and then it comes and does something like this, fails to swing above this high, and then drops to break this low. When something like that happens, we say that price has failed to swing, right? So this is a typical failure swing, right? And now what happens is that it is an indicator of a trend change, and price is going to what? Come and then drop. So that's a second trend change pattern you can actually use. Right now, this is the third one, where we'll have the normal movement, and then all of a sudden, probably due to a high impact news release, we have an expansion that takes out this low. That's a very rapid candle break that takes out this low. And now what happens is that when that happens, price is now going to come back, tap on any breaker block here, and drop. Remember, expansions, when you see an expansion, you expect price to play from a breaker block and not another block anymore, and then price drops from there. So this is the third one. I'm going to explain it better when we actually get to, for the beginners, when we get to that particular class. But I expect that everybody watching this video has come up to some level of understanding of the chart. So if you've not come up to some level of understanding of the chart, then this video is not for you, right? So we are going to play Euro USD and see what has happened this past week. So I'm going to increase the speed, then I'll reduce it. So hopefully my network is actually very sound. So we are waiting to see what happens when price gets to that particular point of interest. I think when price gets there, I'm going to now reduce the speed to 1x so that we don't get to miss a move. So we've tapped into that supply zone, right? We now have to see the kind of structure price prints. Okay, so from here I can see that we have a break. Price has taken, this was a high, and then price has broken this low. This is the first sign that price might want to shift, because this is a very good sign, because for price to break below this low, this protected low, for price to break below this protected low, it just simply means that this supply is actually what's very strong. So we're going to have that as our break, and then we'll see what happens. Let's play price. So when that happens, remember, we don't enter immediately. There are some persons who will be able to just go and set their entries here and then get into the trade, because that's like, this is the other block, and then get into the trade, right, and start selling, right? But we want to be sure that price is going to sell, so we're not going to actually just jump in, because price can actually even just start from here and start going up back again. So you want to be sure price is ready to sell first before you can actually get in, right? You want to be sure price is ready to sell first before you can get in. So we're going to see what happens. Okay. Okay. I'm going to sorry. I need to reduce it down a bit. Then I need to zoom it in. So I'm not going to be doing so much zooming in. Okay. Okay, beautiful. This is what I'd want to see. Typically, this is what I would want to see, right? So now this is now the second break of structure, right? This is the second break of structure, and price is now indeed bearish, right? Price is now indeed bearish. Now, some persons can actually take sells down to that point of interest we talked about on the daily, right? Some persons can take sells down to that point of interest we talked about. But me being a day trader, or I'm speaking to day traders in specific, we may not actually want to actually trade that way, right? You can see this break of structure is also confirmed on the H4 time frame. Please just look to the, would I call this left or right? See the break of structure here, candle close below this low, and that candle close below this low. Now, but notice something that I want you to know. Now, when the candle closed below this low, right, the succeeding candle did not sweep the low, right? That's one thing I want you to, one key thing I want you to have in mind, right? I'm not going to explain so much now, but price did not take out this low. Price went up back first immediately to sort points of interest before dropping to take out this low. Now, when price broke this, which was a confirmation, this is now a break of structure, and then this first one is like our change of character, right? When price confirmed with a break of structure, price did not still take out this low first. Price started going back up to probably come into a point of interest, which is an order block here, before we start selling, right? So, but now, how do you actually maximize, or how do you actually make the most? Because I was able to catch 4 good sells from this particular pair alone, right? Now, we know that there is a break of structure here, and there is like a demand zone here. So this is the first pressure point you want to actually be very aware of. Although, yes, we do know that price is reacting from a much higher level, right? Now, the swing traders will basically enter a sell, and they would not even be bothered until price comes to that demand zone that we have below, right? Every other thing here is just balderdash to them, right? Every other thing here is balderdash to them. But then, as day traders, speaking to the day traders specifically now, we would want to actually take the most trades. Like when price is making its move to the downside, we want to take as many trades as possible, and let's see how we are going to actually be able to do that easily, right? So so now I'm going to be wary of this place. I'm going to be very wary of this place. So now I have my second break of structure, which is my confirmation, and I have an order block here. This order block is mitigated, so I'm not going to actually sell around this range, right? The only order block that is not mitigated for me is this particular area. This is the order block that is not mitigated. So I can now take out this demand zone so it doesn't confuse us, and we can be able to see now we're in an active sell phase, literally in an active sell phase, right? In an active sell phase. So basically we can then start to take sells. Now I can actually take myself from here, right, using this as a form of like inducement. I have a class with my students like in the next 40 minutes, so I'm just kind of like I'm rushing to see how I can be able to do this video in less than 30 minutes. So stop loss is slightly above the range. This is like about 7 hours. If I don't want to do too much, because we have an FVG here too, and yes, the FVG indicator I'm using is Nephew Sam FVG indicator. It just helps you map out all the FVGs if you do not actually want to be spending your time spotting them, right? It just helps you maps it out, right? So FVG indicator by Nephew Sam, FVG Nephew Sam. So I can put my stop loss here, knowing that, my take profit here, knowing that the FVG might be able to stop price from going down. So this is my first trade, and I'm going to wait on this setup and see what happens. Now the trend change has been confirmed, right? This is about 6 hours. So let's see what happens. Okay. So we have a tap into the points of interest. Boom, can you see that? That was actually very, 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 very fast, right? That was very, 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 very fast. Now this was the first sell, right? Remember, we are still actually selling because we are still very bearish. We are still selling, right? So now what happens is that now we have a second break, right? we have a second break, and which means that remember that every break or structure will lead price to come back into a point of interest and continue. Every break or structure will lead price to come back into a point of interest and continue up until we now have like something like a trend change. That's when price now starts to go the other way. So every break or structure, we expect price to draw back into the point of interest, mitigate a valid POI, an unmitigated POI, and then sell. So in this case, now we have our break or structure. I can see a point of interest here, another block that is induced. You can see the inducement, which was this high that got rejected quickly, right? So that's an order block I can actually use to take my trades, right? So now price has mitigated this particular demand zone that I told you guys I was afraid of. Now this demand zone has been used, so definitely this demand zone holds no water anymore. Like it holds no water anymore. I can literally target below it and nothing is going to happen. Now just right beneath it, there's also another demand zone that I should be wary of, I should be scared of, right? So what I'm going to do is like I'm going to, now that I have my break or structure, I'm going to now take my new entry, which is from here. This is my order block, right? Now because the point of interest is very close to the inducement, I can just basically put my entry from the inducement and sell from there. I can put my entry on the inducement and sell because it's not going to do me any harm. And sell to below that order block, right? Now I typically trade 1:5 hours, so I would want my risk to reward to be up to 1:5. So this is 1:5.09. My stop losses are appropriately placed, and the trade should do good if I'm correct, right? So we're going to actually see what happens when price gets there. Remember, this is already 5. This is 6.34 hour. Like if you leverage this on your MT5 or your MT4, you're going to be in for a lot of money. This is literally $634 if you're risking $100. It is $6,340 if you're risking $1,000, and it is infinite figures just by understanding the correct thing to do. You're going to be in so much money. It's not funny. So let's see what happens when price actually gets to that next point of interest, and can be able to tell. So now typically this is the objective target. This is the objective target. The low is the objective target. So this particular low, I'm targeting this particular area because I know that there was other block that has been mitigated, and I know it holds no water, so it's empty and price will come to below it. But if I want to target the correct way, this is the best place to target, right? It is the best place to target. So just pointing that out, because there's a difference between subjective targeting and objective targeting. Subjective targeting is targeting where you want price to get to because of other added knowledge that you have. But objective targeting is targeting appropriately where price is drawn to, and price is drawn to the highs and the lows because they contain liquidity, right? Price is drawn to the highs and the lows because they contain liquidity. So yes, even on the H4 this point of interest is very visible. You can see it. This was a support that was flipped, so it has to turn towards a resistance. So we're going to see what happens. So just wait for price to actually get there and see what price does. Okay, we got tagged in on the trade, and you can see how very quickly we are running to take profit. Wow, that's literally a 1:5 hour. That's literally a 1:5 hour. A what? A 1:5 hour, and this is a lot of money. If you leverage this on your MT5 or your MT4, you'll be in for good money, right? So that's a 1:5. And now with every break, remember we have not reached the point where we actually want price to stop selling, right? And we know that our sales are going to stop here where the break or structure started. So if we look to the left here, this is the break or structure on the weekly, and we want price to come into this zone before buying, right? Want price to come into that zone before buying. So basically, this is the demand zone we want price to mitigate, right? That's the demand zone we want price to mitigate, this bearish block. So I can just basically keep selling until I get to this place, right? And then stop, right? So I can even just put my take profits here, depending, right? So, but then you can also still keep catching multiple entries, because like, why have one entry when you can have so many? Because the market doesn't really move in like in one direction. The market makes these impulsive moves where it like, it goes up and it comes down, you know it. So just like someone is saying he wants to keep holding an entry until Valhalla. Yes, it can happen if you're very, very patient, but then somebody who actually day trades will be able to catch so many entries and will be able to come out at the end of the day with a win, and you're still holding one rubbish you're holding. Still, trade the way that actually suits you better, right? Trade the way that suits you better. So we're going to continue mind map reading this particular market until we get to that zone. So what I'm going to do is I'm going to do ourselves a favor. I'm going to actually draw a line from here that indicates the end point of our, sorry, not there, that indicates the end point of our what, our buys, our sells rather. So I think it's okay. I've already drawn the line already. Safe. I've drawn the line already, which is this line. Yes. So I want to typically stop selling when price gets here, right? And then just observe what price does when price gets there to know what my next course of action, right? So, but I'm still in the sell range, so I can still just keep selling and selling and selling until I get to this line. So now something interesting is actually even happening. Something interesting is actually happening at the moment. And yes, you can actually catch most of these entries with session, but then not all of them. Not all of them, right? I thought session last, not all of them, but you can catch a few of them with session indicator if you're very, very smart. So, but anyways, now you can see that we are also reacting from that block that I told you I was like scared of, but because we've reacted from it completely, so this block is now what's empty, right? So I can consider this block empty, and I can actually target its lows, right? In fact, everything here has been mitigated by that block, so I can even target to as low as here, right? I can target to as low as there if I want. So that is where my next target is going to be. I can target here. That is where my next target is going to be. So now that this sell has actually played out, I need to now look for points of interest that I can use. So this is my break of structure. You can see it here. We've broken structure, so it means more sells, and we need to look for the point of interest that is closest to what, an inducement. Now this is the fair value gap. Now I have a rule or a principle. Look at it. This black thing that my indicator is indicating is a fair value gap. Now I have a rule that when price mitigates the fair value gap, you can see that this fair value gap was mitigated by this candle, which was this H4 candle. I have a rule that when price mitigates a fair value gap, the entire fair value gap is no longer holds water. So price will literally run through the fair value gap and then prioritize another block before it drops. So that's my principle and that's my rule. I'm spilling too much, but then just right above the fair value gap is this very beautiful other block. So I'm going to be using this other block to continue with my sales. I would have actually loved to use like the fair value gap, but because it's been previously mitigated, this is now my inducement, right? This is going to be my inducement. Sorry, I'm trying to draw it in a straight line. This is going to be my inducement, and then I'm going to use this other block to continue my sales. So yup. So this is the third sell now we are attempting to catch, right? Literally, we already up 6 and 5 hour, right? So this is the third sell we are attempting to catch. So let's see if this one is up to 5 hour. I trade minimum 5 hours. So although stop your take profit is on that low, take profit is supposed to be on the low, right? On this low. So and then this is 5.02. So let's see how it goes. Playing the replay 2. So we've mitigated that point of interest, and you can see how we are dropping very, 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 very quick. And boom, we've taken what? We've taken profits. But now I have a problem. We've taken profits, but we didn't close below this low. So I'm going to wait for price to actually what? Close below this low before I can actually consider a new sell. And I think I missed this particular, the next sell, but let's see. I think it was 4 sells I caught. So, but what I like to do is I need a break of structure, right? If I'm going to actually continue my sales, although because my target is CFR, this is my target, I need price towards break below this low and close with a body, not just a wick. It just swept this low and started going up. So I need it to come below this low and close with a body here before I can actually continue more sales. So I'm going to wait for it. Although my take profit, you can see the objective targeting. Price came and took out the low and then just went back up. That's objective targeting for you. So let's see what market wants to do, and hopefully we come down to close below with the body. Market is still dancing around. I think this day was what? Okay, I think price data came back up to take this particular order block, but I didn't really sell from here. What I did was that when price got to this particular place, I think I was able to see that. Let me turn on my session indicator. Okay, no. I was able to see that price got to that particular place and price changed state of delivery on that entry. So price came below here. That's a change in state of delivery. That was a change in state of delivery from here. Right, so I took my sales from there and then targeted the last low. So I was not really waiting for price to now break again. So this was what I did. I targeted the last low because of that particular entry. My sell above here, and it's 5 points. Let me just leave it at 5. Why is it disconnecting? Sorry. Okay, so that was what I did, and this is like 5.51 hour. I could just make it 5.0 hour just to be very, very generous. So that is what happens, and we're going to see what price did. So price came back to that particular zone and just continued dropping. So I think this was the drop that led to the final, although price later came and broke structure. Price later broke structure around here. Price broke structure around here. So if I would have entered, it would have been from this block, this hidden block, and you can see price dropped from there. So we'll just keep dropping until we get to the final target, right? This video is already over 33 minutes. I'm just trying to explain everything as detailed as possible so that you're going to be able to understand without like issues, right? Sorry that the video is taking so much time, but then in total you have like first trade or 6 hours, second trade 5. In total you have like 15 plus 6. We have like about 21 hour. If you leverage this on MT5, you'll be in for a lot of money. Trust me, I made over $50,000 from just this particular 4 setups alone, right? Because like they were just so easy to spot and I didn't even have to risk too much to actually make more. So even risking just $1,000, you're already making like 21,000 from these 4 setups, like easily, right? Making already some good money from these setups easily, right? And this was when I forgot what's here, yeah, and boom, we've gotten to the final target. So now when price gets to the final target, all you just now need to do is like you now need to wait for price to now give you a new trend change that you can actually now use to determine if price is going to now go up or go down. So we're going to be waiting for the new trend change and then we'll see how it's going to be for the buys. So yeah, we kept dropping. So this happened here. We had this break, price broke above here, right? Price broke above here, but price had already come into like a point of interest. Price had not come into a point of interest, so I needed price to come into a point of interest at least. So I needed price to come into like this. This block is hidden. You may not be able to see it, but I needed price to come into that block. Although I was not going to like set my entry there, no, I was just going to wait to see what happens. But my plans was that if price doesn't sweep this low again and come into that point of interest, what I was going to do is I was going to wait for price to break above this high before I can enter any buys. So I would wait for price to break above that high before I could enter any buys. But I think it did that. Price came down back to that low, swept it, and then entered into that point of interest. And I was able to take my trades to the upside. So if you've been listening throughout like this video, you're just going to be able to learn a lot of things, a lot of like minor things. So you can see what happened. Price has broken above. Price has swept and closed inside. Now price swept and closed inside. What I would typically do, right? What I would typically do myself then, if I had seen this and I was basically active, was when price closes, I just open a market order, right? I open a market order from here. My entry is going to be here where price closes. My stop loss is going to be below here because now we swept this low and now we are now protected here, right? We are now protected on that level. So this was supposed to be my buy order. My buy order was now going to, my first buy order was going to be here until we get to this high, right? And my take profit, my stop loss is around here. So this is not up to 5 hours. This is the objective target, but I like to target 5 hours. So I'm going to want to target at least above here. Yeah. So, but we are going to still be able to see entries anyways. You're going to be able to see entries. So let me just take this off and show you a much more preferable entry that you can actually take. So let's play price. Although this looks like a head and shoulder. This looks like a head and shoulder. This is the shoulder, the head, the left shoulder of form, and then when we break above, we can enter price here and then buy. So it's a pattern confirmation type shit. So let's see. So we need to break above this high. Okay, great. We broke above that high. We broke above that high, right? Now we also have a change in state of delivery on the H4 here, right? We had a change in state of delivery there, and let's keep seeing what price is going to do. Wow! So now you can see price has come into this thing. Price coming to the fair value gap, right? And this is where I would have actually put my entries out, right? So this is the first entry I would have actually taken. So we had one entry here, we had another entry here, right? We had one entry, we had another entry here. So that would have been my first entry. This would have been my second entry. And let's see what happens. I need price to close above here for me to now be able to enter another entry. Okay, boom. So when price closed above there, now this is going to be my next entry, right? This is going to be my next entry. I need price to come into this zone and then buy, right? So I think that's a much more safer entry that everybody can actually now get to enjoy. This is a much more safer entry than everybody can actually get to enjoy, and price has come into it. This was actually the entry I took for this week. Right, entry here, stop loss slightly below the other block, and then my take profits at this high. This is like a 6.1 hour trade. So let's see what happens. We have a change in state of delivery. Price came back into it, swept this low. If we close above here, it's a buy. Boom. We closed, we retested, and now we are buying. How beautiful is this? How beautiful is this? And these days, buys now move even faster than sells. How beautiful is this? Literally, map reading price action. How beautiful is this? So I think I'm going to be ending the video here. We still have a long way to go, right? Upcoming buys. I want price to now close above this high, right? If price is able to close above this high, oh, beautiful. It closed above, so it's a bullish candle, so we are definitely what? Bullish, right? Close above with a bullish candle, so we're definitely bullish. And then we're going to see price buy to at least as high as this high. So we need price to reclaim back that high. Sorry, my line is not straight. I'm sorry. My line is not straight. I've been trying to draw straight lines since at least I tried. But then that's the first take profits. So if I want to keep trading, if I don't want to like keep disturbing myself with like so much entries, I can just drag my take profit until this high, and I'll have a very very stress-free 10-hour trade, risk-free, right? 10-hour trade, risk-free. So many a times it pays to just like watch price, just relax, calm down, and see what price is doing. Like literally, there's no rush. Watch price, read the price map and structure, and literally points you to every direction, right? It points you to every direction. I wish you guys good luck, and I wish you a successful trading week, and I wish you a productive and a profitable trading months ahead. My next video is going to drop on Saturday. It's going to be for swing traders only, right? So I basically explained intraday trading with just this particular video on Euro USD. That's my 4 sales that happened in the space of like 2 weeks, right? My 4 sales happened in the space of 2 weeks. This is for intraday traders. The next video is going to be for basically for swing traders, how to be able to get the particular leg of price that price is going to move from and all of that, right? So we've basically discussed the 3 important trading types of traders, call it whatever. Swing trading, lower time frame trading. Okay, swing trading is coming on Saturday. This one I'm going to upload tomorrow or next tomorrow, depending on when I'm able to be done with the editing and all of that. Depends on whenever you're going to see this one. So swing trading, I'm going to also release another one midline along this week or next week, depending. That one is going to be on swing trading. And then we've done lower time frame trading, literally like my most viewed video from last week. So if you've not watched that one, check that one out, right? Check that one out. And also, yes, if you're actually trading with a personal broker and you're looking to actually level up your trading, and you've been in search for a good broker that is very reliable, AssexMarkets is here for you. If you join my Telegram channel using the link I'm going to drop in the description of this video, there is a contact agent that can help you with any query at all you have. AssexMarkets is not just fast, but they're currently one of the best brokers out there now, and there's a bonus for new signups. So if you actually deposit above $1,000, you're going to get 50% of your deposits back for you to trade. So you're not just going to have like a $1,000 equity, you're going to have a $1,500 equity, any amount at all if it's your first time deposit. Sign up with my link on the description, and you're going to actually sign up with my link, verify your account, create a live account, deposit above $1,000, and you're getting 50% of your deposits for you to trade and for you to scale up even faster. I wish you guys good luck, and that's one of the ways you can get to support me, right? I wish you guys good luck, and I wish you a profitable month ahead. Take care.